Okay, good morning, everybody. We are Signal Centre Talking Ball. Happy Monday. It's the 11th of May. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Morning, gents.
Good
Morning, all.
All good.
Yeah,
Yeah,
nice. Yeah. Quite a
very
fresh start
nice.
to the weekend.
Enjoy Boris's update yesterday.
Thought it's a little bit. I didn't really get a lot out of it, to be
A
honest.
bit vague,
Just
wasn't it?
well, yeah. Just sort of like I thought that we would have got a little bit more instruction and stuff, but I suppose it just doesn't feel like anything's changed really. You can go out for a little bit more exercise.
Golf
A lot of
courses are
people,
reopening.
I suppose a lot of people
Yeah.
can go to work, can't they?
As long
Yeah,
as they don't
yeah.
go public
potentially.
transport.
Yeah, sort of. I suppose just from a personal level, it didn't feel like much has changed. But then, apart
It
from
doesn't for us,
two
does it?
No.
in the office, nothing has. But yeah, I thought there would be a bit. We'd get a bit more from it. Hopefully today in Parliament, we'd get a little bit more information.
Yeah.
A lot of people were hoping for to sort of it to open up a bit more, but it just feels still as closed as it was. So
Yeah, I mean, there was
another
the
3
rumours,
weeks, I think.
There was the rumours about being able to have a bubble of friends or family, wasn't there? Which I think would have been
Yeah.
quite nice. Certainly
Yeah.
for
I
I'm
know
still
there's so
surprised
many rumours.
on the hospitality front when he's talking about lifting that by the 1st of July. Because a lot of people said that wouldn't, restaurants and bars wouldn't open until at least August, sort of September time. But
maybe
Yeah.
just dangling a carrot, and hopefully we can all be responsible and keep doing what we're doing, I guess, and keep that R number down.
Yeah.
We want to be keeping the R number up though here.
Yeah, there's different R number, isn't it? We have to make that clear. Should we make that clear?
Yeah.
We're all cheering the R, and everyone's looking at us thinking you're mad.
Yeah. Okay, so shall we dive into some FX
yeah,
roundups?
I was going to concentrate on yen this morning, only because we've triggered 4 different trades already. Thursday was a bit of a non-event. Friday, horrific numbers with regards to non-farm payroll came in at 20.5 million, unemployment rate of 14.7, but we still saw sort of risk on. We did see a move to the downside in the dollar index, which is on the screen at the moment. So this is dollar index DXY 2 hours. So we saw this move to the downside, and then I don't know if that's a real candle there from overnight, but
what time is it? Is it?
It does say 10 o'clock.
Yeah, sometimes some of the markets open around 10 o'clock, and maybe you'll get that little spike. Because that's what it lines up with, maybe the close on Friday or something. I don't know.
Yeah,
even that looks a bit funny. The candle on Friday.
Yeah, looks a bit weird, doesn't it? Like it's trying to close this gap here. But anyway, the dollar index is starting to move again to the upside, and I believe that's probably buying safety again now, because the indices for me are hitting a few decent levels. So no good news out on Friday, and like I said, we've hit a few levels in yen crosses this morning. So this is 78.6% pullback level. We've just crashed into that. Euro yen, we had a bespoke resistance at 116.14, and it's a 50% fib, and we've crashed into that. And then Joe had a couple. Aussie yen, this is like a big wedge formation that we've broken out of, and a potential double top or a retest. And then New Zealand yen is a weird fib. It's an 88.6% fib pullback. So it's all about whether or not we think there's going to be risk off again. And Joe and I were just talking about it off air a minute ago, and that brings me on to my trade of the day. But I'm obviously not going to do it yet.
Just on those risk off, risk on, risk off. I mean, look at the chop over the last few days. It's just been impossible.
Oh yeah,
I'd imagine there's been a lot of people, myself included, trying to call the top on those, following that rally from the lows, expecting a continuation lower, but it's just been a mess, really.
I mean, if you look at a lot of FX pairs, obviously we had that massive sell-off or whatever in indices, and then this pullback, and most of them now for 6 weeks we've had inside bars in majority of currency pairs, which highlights nothing really, indecision. RSI is flat, so we really are consolidating at the moment, just waiting for the next big move. I think, and I do believe it will be to the downside, but I will be talking about that on my trade of the day or my gun to the head.
Lovely. Is that all for FX?
That's all I'm doing.
Okay, good.
We'll give it all away.
Well,
got to pay for the good stuff.
Exactly. So, Steve, do you want me to have a go on indices or?
Yeah, whatever. Yeah.
Yeah. All right. Fine.
Still talking FX on the title. Oh, there you go. Look at that.
Oh,
Smooth.
Yes, it's quick.
Okay, so indices. We, as Ian said, continue to see appetite for risk despite the horrendous job numbers. The markets and the participants seem to be focused more on the potential for global economic recovery rather than focusing on the bad stuff. We had Trump maintain negative rhetoric over China over the weekend. But that, again, is still not really derailing the markets. They're all up across the board today, although the European indices now look to be looking a little tired following the moves higher. I've got on the screen the DAX 30. So last week I was looking at this break of the wedge, thinking that was going to be the end of this bear market rally, and that we could start seeing opportunities to sell it. We've had this big Marubozu candle formed on the 30th of April. It wasn't quite an outside candle, but near enough, pretty much a large engulfing. And we've seen a rally to 50% of that Marubozu candle. So the entire range of the candle here comes in at 11.045, and it looks as though we've just touched that almost exactly this morning, with actually a high of 33, so 10 ticks under, but looks pretty good, I think. And that's on the daily chart, and it's a similar looking setup on the FTSE. We did get the bearish outside candle and the large engulfing on the 30th there, and we've seen pretty much again a retest of the 50% level of that Marubozu candle, of that outside candle, coming in at 60.20. So that's looking quite interesting following that break of the wedge, and possible for a reaction lower. But been calling that for a while, and let's keep getting thrown by it. So let's see what happens. With regards to the US, nothing standing in the way of that at the minute. Just a big old Fed-induced rally. Very little regard for any of the Fibonacci levels on the retracement there. It's just smashed through to 78.6 like it wasn't even there. Heading towards that 88.6, which is probably the last chance for the bears to have a go at shorting it. Looks like a reasonable level around about 9,400. So we'll wait and see what happens on the approach to that level with the NASDAQ. One thing I was looking at, which is a little bit out of the box, not something we generally sort of cover, but looking at the ratio between equities and bonds, particularly in the US, because that's sort of where I'm looking for the next clue about where this rally potentially could end. What I've got here is a chart between the S&P 500 versus the 20-year government treasury bonds. So typically, there's an inverse correlation between stocks and bonds. So if this ratio is moving higher, it suggests that equities are outperforming bonds. If it's moving lower, it suggests bonds are outperforming equities. Well, we've seen this sort of big uptrend here, which is where stocks were very much in focus and were going really well, people making lots of money. We've then seen this sort of downtrend that's formed, followed by this big breakdown in the ratio here, which started around about March, when obviously the coronavirus situation really sort of began to bite. And we're seeing this retracement now through the 38.2 and approaching a 50% Fibonacci retracement level of this ratio, and also some key lows from back here in August. So in and around this area is where I'm thinking this rally is probably going to start dying. And well, I'm hoping anyway, from a technical perspective, that that's when we're going to start seeing some shifting out of equities and into more safer haven assets. But we'll have to wait and see.
Okay, like that. Cheers.
That rounds up the talking indices, so I'm going to chuck it over to Steve and he can chat through some commodities for us.
Really looking at crude oil, it seems to have sort of consolidated around this $24 to $28 level. This is US crude oil, and we can see a lot of sideways motion over the last few days. I still think there's obviously with the fact that we're still in lockdown across the globe, this is going to remain under pressure. It's not going away. There's a little bit of news out, really. Speculators have raised their US crude oil longs. That's from the CFTC, the Commodity Futures Trading Commission. They said the speculator group raised its combined futures and options position in New York by 2,000 contracts to 340,000 contracts during the week, last May 5th week. US oil drillers have obviously cut production and everything. On copper, we've seen this nice little rally in copper. I'll take it out to the daily chart actually, and we've seen it move through the cloud resistance, broken above this 239.50 level, which for me was a sort of line in the sand. It's sort of like jumped a little bit higher and has sort of like held around 243, and we're seeing it pull back a little bit this morning, so hasn't been completely convincing. But there is there's a story I picked up this morning. There's a manufacturing plant engineer, Byron Kennedy, is resetting a machine to spray print a layer of copper onto door handles, aiming to use the metal's antiviral properties to counter the threat of COVID. So a little bit of copper's not needed elsewhere. They're finding places to put it. On the shorter term time frame,
nicking the door handles, wouldn't we?
yeah. On the shorter term time frame, this is an hourly chart. We've got a potential for a bit of a double top, but it's a very short term time frame. This is the 239.50 level that we broke through. So if we get a break of this swing low here, there'll be two reasons to sell it. Get a break of there. There'll be maybe a little bit of a move down. I'm looking to sell a break in that this morning. I've redrawn the resistance in gold, but we're still within a triangle formation. A little bit higher. Finding some resistance at 17.23.24 in gold, but I can't see much changing. As you said, the equity market seems to be all over the place at the moment. We've sort of we're holding above the. I mean, 1700 is the pivotal level in gold at the moment. This is like the midpoint of this symmetrical triangle. So very key. So I'll be looking at a short here and take profit around 1700, and likewise buy the dip here and look for 1700 as the profit taking area. There's the reason we've probably had this little rally is that there's a new wave apparently of infections that are causing a little bit of concern. But also that could lead to further stimulus measures and lower interest rates. So
there was a few rumours at the latter end of last week that we might see negative US interest rates.
Yeah,
that was Thursday, Friday. That would probably
I mean
help the cause maybe, but they've faded supposedly. That's probably why we saw the dip in the dollar index, and then it's obviously this stronger open today.
Yeah, and if that dollar continues to strengthen, obviously gold and silver will probably take a hit to the downside as well. Mm-hmm. Silver, again, is really, really struggling. We're in this small corrective bullish channel here on the short-term time frame. I think it's worth fading here. If we look back to the 14th of April high as placing a stop above there, that gives good risk reward to remain in this channel. So that's really me. We obviously seeing the VIX continue to drop lower, so volatility definitely feels like it's dropping, but it's just choppy markets in sort of like tighter ranges. That's what it feels like. As we've said, I've said before, the more this VIX drops, then the more gold will become the safe haven rather than the dollar. Dollar still feels like it's got a little bit to go on the upside. So 28 is still an elevated level from historical levels way back between sort of 10 and 15. So still a way to go for this to play out.
Yeah.
That's me.
Okay. Nice work, Steve. Okay, so time for the challenge, the gun to the head challenge. So last week...
Trevor wants to join in now.
Yeah.
He loves it. He's telling me what to do.
Is that where you get all your ideas from?
I've got a coin.
Trev's Levs. That's what we used to call them, wasn't it? Trev's Levs.
So this is the trades that we did last week. Let's see if we can zoom in on that. So we had a euro yen trade from Ian. That was 0.51R to the good at the 9 o'clock close. Steve stopped out on
Continuing
oil.
my bad run, four in a row.
And I had a win on sterling Swiss of 2.25R. That was
Nice, good
looking really
skills.
good at one stage, but it rallied back quite sharply. So overall, 91%, nice little uptick there. Not quite at new equity highs, but heading in the right direction. So all looking pretty good on that front. So I can go as I've got the screen. I'm looking at New Zealand dollar, Japanese yen, and really just backing a trade idea that's already been triggered this morning from our intraday analysis. So I thought I might as well back that and give that a go. So we're trading at 65.55. We were triggered this morning at 65.68. So a few ticks on side already, but I'm going to jump in now at 65.54, targeting a move down to 64.45 and placing a stop loss just above these recent highs at 65.87. So a nice breaker trend there in the short term. Rallied into these resistances around here and looking for a short-term move lower.
Lovely. I like
Over
it.
to you.
Aussie Swiss.
Hey.
This is the monthly chart, so it shows you the risk-off trade. Basically, that being a multi-year low going back to the March candle. So we've had, as with stocks, we've had a decent recovery to the upside, but I believe it's going to be limited. If we go up here, if we squint really hard, probably see a 5-wave count to the upside. Got a bearish outside candle on the daily chart. That often indicates the end of a trend and the start of a new downward bias. If we go to the intraday chart, we've got a 78.6% fib here. Potential double top, potential wedge, potential everything else. There's nothing really in the way of support until down here, which is around about 61 the figure. So it offers good R. And I don't expect it to get there today, like I say every day. I'm just going to stop above the high. So
11R. Whoa.
63.45. Be like a Beckham from the from his own
Halfway
half,
against
wouldn't it?
Wimbledon.
Yeah. 63.17. That was on the day I got married.
Oh, was it?
It was. 9.8R. It's getting short. 63.45. Stop at 63.70. Targeting 61 the figure.
Okay, that is delightful. I hope that plays out. Steve?
Yeah, I'll tell you what, without looking at what chart this is, what chart do you think this is? Don't look.
I've seen it now. I can't unsee it.
Dollar index.
Dollar index. So I'm playing this 100 level. Psychologically, that'll be a level. Potential head and shoulders top. So I'm going to get, as a punt, gun to the head challenge, going to get short of this at 99.87 current price. Stop is at 100 spot 01 and the target is 98.75.
Okay.
Everything else I've sort of like gone through. Didn't really fancy anything else, but as a bit of a punt, I'm going to get sell dollar index.
So what were your levels again on that? What was the entry?
99.87.
Yep.
Target 98.75 and stop at 100 spot 01.
Oh, lovely.
Like it.
Right, got all those. Perfect. So, news-wise, anything else that we haven't touched upon?
Nothing today, is there?
So we obviously talked about at the outset Prime Minister Johnson's announcements about lockdown measures. There is further clarity set to be heard on that later today. There is supposed to be the latest round of UK-EU negotiations due to start today. Obviously, the agenda is going to be pretty lengthy, I would have thought, and might be some important conversations to have before they even touch on the Brexit subject. So, I'm not sure what will come of that. Talking about obviously trying to get this deal sorted out with EU, but I don't know how close or far away we are. Doesn't seem too important at the minute, does it, given what's going on?
Not really.
Data-wise, not much on the docket from what I've seen. Just some Aussie number, which I think it's already
No,
been out.
bugger all.
So, yeah, could be quite a quiet day then.
Consumer price index for China overnight.
Right.
But apart from that,
Got some Norwegian. We've had them out.
Bloody hell,
the
we're scraping the
CPI.
barrel there,
Yeah.
aren't we?
Norwegian figures this morning. That's it.
it's all about tomorrow, isn't it? And then
Yeah, you got another CPI data out from the US
inflation
tomorrow.
figure.
And then same for us on Wednesday morning, PPI. Yeah, quite a bit out later on in the week. We've got a Fed speaker later, and we've got two Fed speakers later. Not sure whether or not they'll be market moving or not. They're down as medium importance, so probably not too much to worry about. Okay, that's pretty much it then. I think we should wrap it up there and come back tomorrow.
Lovely.
Cool.
Good luck.
All right.
Cheers.
Have a good day, gents.
Cheers, guys.
Bye.
Bye.